Hello and welcome to this video. In today's video, we're going to deal with point of entry 7 and we'll understand the concept of RTO and OTE. Yeah, chill. I'm going to teach you what they mean and how to trade them. Before that, you should understand fully well that this tutorial is brought to you by PipSecX and our WhatsApp number is +234-8055-269615 and I, Investor Tio, will be your host for today. If you're new to this community, this is our YouTube community where we drop trading updates. Don't subscribe to our community, like and share, and get set to be blessed with valuable content on trading. Do what us turn on notification bell so you can notified, understand what we are doing. Okay, yeah, our trading updates are also dropped on our Telegram community. Join us on Telegram and know how to maximize gains on them. So yeah, let's get started. So you can see I'm already typing this down. RTO, you can literally mean return to order block or return to order or whatever you want to utilize as a definition. And OTE means ultimate trade entry. And some of you will be shocked when I mentioned whatever you want to utilize as a definition. And that's the truth. Okay, trading is subjective. Realize what's subjective right now. Well, yeah, trading depends on whatever you take it to be. Whatever you say it is, that's what it is. RTO, return to order block, OTE, ultimate trade entry. So what you just need to understand is how these principles apply and how you can trade with them. Okay, it's very basic. So a way you can also use as a point of interest on confirm your entries, right? Remember, I see on that point of interest to confirm where you buy entry from is to utilize RTO or OT. And what do you use when utilizing them? You work with this tool over here. So let me pick up this tool over here, and that's your Fib retracement tool. That's your Fibonacci tool. So what you utilize to work with it. So before I get started teaching you how to use it, copy the settings from my Fibonacci tool. Let me click on it again. Copy the settings so I can actually trade with my Fibonacci. Alright, so these are the settings. These are the settings I work with here. So these are the settings for my Fibonacci. This is style, trend line, level line, extend line left, extend line right. You can see the way I arrange everything. But this is what you really need to do. So you don't spend too much time. Come here, use one color, pick black. Background, you don't want background colors, so just pick it and then turn it off. You can actually turn it off from here, but just leave it that low. Extend lines, you can see 0, 0 0.382, 0 0.6181. Just copy exactly what's here and set yours to be like mine. So when I'm teaching, you can follow suit with them. You don't need coordinates. Coordinates is literally where the Fibonacci is on the chart. If I change coordinates, it will change on the charts. If I go back there, see coordinates has changed. Visibility is literally what is visible on my charts. So it's that simple. All right. So now I'm just giving you my settings for Fibonacci 2. Let me explain how to utilize the Fibonacci to work with concept of RTO and OTE. I think I got this definition of RTO from Tech Freeze. Yeah, one of my bros in this trading niche. So return to that block is actually a nice way of putting it, okay? While OTE is optimal trade entry. Now, what does this return to order block signifying? Okay, what does it signify? Whenever you see return to order block, you should understand that whenever there's a break of structure in the markets, there's a clear example of a break of structure. Break the higher high over here, right? Assuming the market is in an uptrend, this is an uptrend example. So whenever there's a break of structure over here, BOS. Whenever there's a break of structure in the markets, we will definitely expect the markets to return to another block. All right, return to another block, so it can actually work with that to get new moments to push all the way up to continue this uptrend. Okay, so before continuous movement, we expect the market to return to another block. But the Fib retracement tool actually gives you an idea of a probable level that you're expecting the markets to return to. So this is a break of structure, right? Before this uptrend occurred, let me start from the bottom here. It was going like this, then came down here too. Okay, good. So this is an example of an uptrend too. All right. Now, how do we use the Fib retracement tool to spot possible retracement zones for this uptrend example? We actually pick up the tool. This is Fib tool. Click on it. Take it to the bottom, the low, ascend it to the top, and then observe how it plays out. It's as simple as this. This is Fib retracement tool. Take from the bottom. Let me delete it again and take it again. This is Fib. Take it from the bottom to this higher high and wait for market to retrace back to your zone. And question is, there are several zones on the chart. Which zone do I work with? while working with the Fibonacci retracement tool, I work with the golden zone of 0.612, 618, pardon. Let me type this here so I can get it. I call it the golden zone. A lot of people call it the golden zone actually. Golden zone 0.618, depending on what you're working. Some people golden zone can be 0.5 to 0.618, but mine is 0.618 to 0.786. So this is my golden zone. Okay, I call it my golden zone. So what I usually do from here, take it all the way up, wait for the market to come back to this place, to this golden zone, so you can buy from here. Right. So in this first example, this name color this golden. This should be close to golden, but you can manage the color. Okay. So basically, you wait for the market to come here before you can buy. In this current example here, market didn't get here, so we missed out on this entry. So I'll delete this and expect another entry somewhere else. So I'll pick up my Fib 2 again, come here, draw it all the way up to this place, and then observe. Now, the market this time around entered our optimal trade entry zone. Remember, optimal trade entry signifies that region in the market that we expect the market, most probable region in the market that we're expecting price to get to before reversing. The market got here. Since the uptrend is still valid, market then decided to respect us this time around. It's respected us here, and it has respected us. So we're entering our buy position from here. Our SL beneath the block, okay, that's the zone. Can place your SA directly on it, but that is risky. You can place your SA here. You can place your SA even beneath where your other block is supposed to be. Depends on you, on what you want to work with and risk appetite. So you work with your SL, IOTP with your target nearest liquidity. So some of us will work with nearest liquidity. Some people work with targeting 0.236 as their TP. People work with 0.38 as their TP. Anything that works with you, fine, right? But it's best to get your first TP at nearest liquidity because that's where retracement can occur in the market. So get your first TP out, and then you know how to keep on targeting more levels in markets. It's that simple. All right, so this is an example with an uptrend. Sell example is basic. Okay. Now this is the sell example over here. You come to your, this is on Fib retracement tool. Click here. Right, from this up, take it to the bottom, and then you check if the market got to the golden zone. This example, market got to the golden zone. Actually, I didn't even measure this golden zone because I've been using the Fib tool in the past. I already know how to gauge for the golden zone by just drawing the arrow, using these arrows to draw them out. So market got to the golden zone. So what I'm going to do right now is just enter a sell position. We'll enter sell from here. Remember, we are using limit orders or not market execution orders. So what I mean by that is that before the market gets here, we would have placed our order. When the market works with this move, we would have drawn the order, the Fibonacci from this top to this bottom here, and then expect the market to get here. If the market actually gets here, it triggers our order, we enter our sell this up, our stop loss directly above it, and our TP 1 should 2, 1 should 4, 1 should 5, whatever you like, and then you just milk the market with that. Or you simply use the concept of nearest liquidity here and then collect your first TP before moving on. Alright, it depends on what you want to work with. This is a downtrend example. Okay, so basically I'll explain how you can do this and work with Fibonacci. Now sometimes Fibonacci can actually give you huge stop loss. Don't mind the stop loss here. I'm very huge. So it's your duty as an analyst to refine and reduce your stop loss. That's if you're working Fibonacci as your way. So you should have your set of rules you work with to trade it. I'll be going to the market to test this concept out with you, like going to the real-time chart, test this concept out with you. I don't do that in this video. So in tomorrow's video, I'll be explaining RTO and OTE on the chart, so you can see real-time examples on the chart, how you can use Fibonacci, but this has given you a clear example of how you can use them to trade. All these concepts, they work on the chart, is real-time, all right? So make sure that you are active and you're ready for tomorrow's training, or will I say the next trading video's training, and get set to learn how to maximize gains with RTO and OTE as your entry confirmation criteria. Yes, so that brings us to the end of today's video. Definitely do subscribe if you gained a lot, and turn on notification bell so you don't miss out our updates. Like and share as usual. Join our Telegram community, join our Twitter family. Just join our family on these socials so you can get updates and we'll steadily grow as a family. I'll see you in the next video, champ. Peace.